The Nifty heads higher above the 18,000 mark after a soft start. Metals and farm are correct. Banks, IT and FMCG stocks gain in trade. The broader market underperformed the key indices.
Kesharam Industries reports a weak third quarter. Losses increased by 50%, while a one-off of around 170 crores also impacts the bottom line.
India Pesticides, that is the stock trading higher in trade after it announces launch of a technical herbicide product to be produced at its Sandila plant for export purposes only.
Federal Bank reports record return ratios and NIMs, guides for increasing NIMs by around 10 to 15 basis points. By the end of FY23, the management tells CNBC-TV18 that margin expansion seen in the third quarter will moderate going ahead, and the bank may consider raising funds in FY24. Hello and welcome to Chartbusters. I'm Nigel Souza and joining me today is Sonal Bhutra. Hey Sonal, good to have you on the show. Well, the markets, were bounced up in style. So, some would wonder, yesterday we saw a bit of a downtick. Well, within 45 minutes, we have cleared all of yesterday's losses. And if you consider both the days together, well, in fact, we are trading with mild green. But the big question is, what do we do from here? To understand that and more, we're joined by Shilpa Raut for a technical check. Hi, Shilpa, is this the real deal? Will we get past that 18,050? Well, yesterday we went there, but we corrected sharply from there. What's your sense? What would your trade be at around 18,020?
Good morning, Nigel and Sonal. Nifty has been in a range from quite a long time now, in between 17,800 to 18,050. Extended targets towards 18,200 on the upside to be maximum. So for me today, of course, there is some sort of buying strength being shown here, but I believe that we might see some sort of resistance also at 18,100 zones. So for me, safe traders should book profits if they have entered fresh in the morning. They should book around these levels, and if it sustains above 18,100, then again a buy.
Okay, if it sustains above 18,100, then again a buy. By the way, Reliance Industries, that is a stock which is also pushing the Nifty even higher. So Nifty is at the day's high. Shilpa, while we are talking about mid-caps underperforming, but yes, again, mid-cap index has also turned green as we speak. What would your individual technical bets be at this point in time?
I have two buys. One is PI Industries. PI Industries in the future is trading at around 326065. So I believe with a stop loss of 3240, one should look for targets of 3350 and 3400 targets. The other one buy would be in GAIL. GAIL, since yesterday, has been showing a lot of strength with a stop loss of 96 from here. You should look for targets of 100 and 101.
Okay, all right, Shilpa, thank you so much for joining us. So that's all about technicals on the market, and markets are continuously seeing higher highs as we speak. So we'll continue focusing on that. But for now, we'll shift focus to our special segment where we'll get you a few ideas for profit from Money Control Pro. Bharat Gianani of moneycontrol.com joins us now to talk about a stock that he's tracking very closely. Bharat.
The ideas we would like to present is Titan Company. The company in its recent pre-quarter update indicated that the standalone business has grown by healthy 12% in quarter 3. The key jewelry business has grown by 11%, driven by increased share of new buyers as well as increased sales of studded jewelry. The eye care business has grown by about 10%. If we see the watches and wearables division, it has outperformed, growing by 14%. The emerging categories such as sarees and fashion accessories have grown by a whopping 75%. Titan has huge runway for growth in the jewelry business, given the mandatory hallmarking regulations, which mandate sale of certified high purity jewelry, which is leading to market share gains for organized players like Titan. The company is also gaining market share driven by the localization strategy, wherein it is introducing products as per local tastes and requirements. Network expansion as well as increased new products will drive the sales in the non-jewelry business and provide the next growth leg. Titan has a strong brand parentage as well as a brand pull. At the current market price, the stock is trading at a PE of 55 times its FY24 projected earnings, which is at a discount to the medium-term historical averages. Investors can add the stock in the pool.
Okay, Bharat, thanks so much for joining in and filling us in with those details. Well, time to slip into a short break, but on the other side, we'll be joined by the management of Kesharam Industries. The stock is reacting to its numbers. It's down close to around 8%. Was the street expecting something more? Well, we'll ask that question to Mr. Radhakrishnan, the whole-time director and CEO. Welcome back. Well, let's focus on Kesoram Industries as promised. The stock is under some pressure. It's reacting to its numbers, and maybe the street was anticipating some sort of an announcement. Well, the losses continue as well. Some bit of improvement. But how does Q4 look? Well, we're joined by Mr. Radhakrishnan, the whole-time director as well as CEO of Kesoram Industries. Hi, Mr. Radhakrishnan. Well, we talk about the operational performance in just a bit. But just clarify this point. In the run-up to the numbers, there was various speculation that maybe there's a takeover bid that's come across to you. We've asked you this numerous times, but please clarify yet again, have y'all been approached by anyone, any company to be taken over?
Good morning, Nigel. No, we have not been approached by anyone.
Okay, let's flip it around then. I understand that, still there's a bit of a crunch on the liquidity front, and debt as well is reasonably high. You've been bringing it down, but the debt pressures continue. Have you all approached anyone, either a financial investor or one of the larger peers, to sell out some part of the stake?
No. So the way we look at it is today, the debt is 1,650 crores. Given that 1,650 crores, yes, it has been an extraordinary first half for the industry as a whole. We should be doing, with our capacity of close to 10 million, we should be doing about 500 crores of EBITDA. So 500 crores of EBITDA with 1,650 crores of debt is comfortable.
Okay.
Maybe slightly elevated, it should come to 1,200. That's the way I look at it.
Just to clarify, sir, the company is not on the block, you're reiterating, right?
Absolutely.
Okay, all right.
Okay, so no plans for selling any stake or any part of your company to any other investor. So that's about the other part, but let's talk about the operational performance right now. You spoke about your debt figure, the EBITDA number as well. Can you give us a sense of what volumes look like in Q3? You had earlier guided for 7.5 for FY23. That is something that you had cut down in terms of guidance. Will you be able to achieve that 7.5 mark as well?
So, two parts to your question. One is volume, Q3 volume has been 1.8 million. So we have done about 5.04 million in the 9 months. So 7.2 we should touch. That's the way I look at it.
Okay, so you're saying
Not
even
7, slightly lower than 7.4 what we sold last financial year.
Okay, so 7.2 is what you will be able to do this year. You had earlier guided for 7.5, but now you've cut it down even further.
Yes.
Okay, interesting. So earlier it was, I think you were guiding to closer to around 8, then 7.5, now 7.2, but we're going with 7.2. Now I just punched in the numbers quickly when you gave us that number, and it appears the EBITDA per ton is around 500 rupees, 480 to around 500 rupees odd. Now costs have been cooling off, sir. Earlier you were saying that your hope is that the EBITDA per ton goes to around 700 rupees per ton. Happens in Q4, you think so?
600 we should touch because the costs have been cooling off. But if you look at even between H1 and Q3, the realization per ton is flat. And whatever we did at EBITDA, cash generation of 102 crores in Q3, as against 138 in H1. So the entire EBITDA kicker has come by cost pressure coming off. But it is slowly coming off. What is important is even the prices to go up. We hope the prices, we are able to translate the prices has to go up.
Okay.
Which is important. I would say 600, anywhere between 550 to 600 is what we should finish the year with.
Oh, that's a very small improvement then from around this 480, 70 rupees odd. I think the street would have been happier to see a higher number. Now I'm punching in the number, 7.2 million tons that you're talking about. At around, for the year, you have not averaged 600 rupees. So that EBITDA, absolute EBITDA for this year will not be the 500 crores that you're talking about.
It will be close to 400 crores.
It will be close to 400 crores, correct. All right.
All right, so that's the EBITDA number. In that case, we were also talking about the debt number. You said 1650 crore rupees and 500 crore rupees of EBITDA is something you're comfortable with. Now we will be able to do 400 crore rupees in FY23. What will the debt number look like? 1650 crore rupees, how much will that decline to? And your refinancing that you were looking at, what is the update there? What is the current cost of debt for you?
Yeah, so the key to this balance sheet is refinancing. Which we hope we should be able to do that by March. If the entire refinancing doesn't happen by March, at least it should be tied up and the transaction gets executed in the first quarter of next financial year.
Okay.
If we delay any further, it is not good for this balance sheet.
So what would the rate be then, Mr. Radhakrishnan?
The rate will be somewhere between 10 to 11% is what we are looking at. Currently, we are 19%. That's where we are.
And you will be able to do it in the first quarter of next financial year is what you're saying.
Yes, absolutely. That is our topmost priority for us as an organization.
You know, Mr. Radhakrishnan, you frankly said it, right? If you can't do it by quarter one, it will not be very good for the company. So what's the backup
Absolutely.
plan? What's the backup plan then?
We will make it happen. So if you want towards backup plan, you will not make it happen.
No, but there has to be a plan B, you know, otherwise all those rumors that we've been hearing for many quarters that could possibly happen. I'm not sure, but as of now, you're guiding for that, you know, refinancing to take place. So we'll take that on board. But if it doesn't happen, that'll be interesting. What about the debt, absolute debt number from 1650 crores? What's the trajectory? You end this year with? Yeah,
Sorry.
Mr. Radhakrishnan, I'll just clear, you know, put forth my question first. By the end of this year, what does the debt number end with? And for FY24, you must be having a scaling down plan. So the number on both these fronts. Please go ahead.
Yeah, there are no obligations from here to March, principal obligation, only interest obligations are there. The next installment is in August, right? So it is more of a rate at which the financing is running that needs to be curtailed. Because it is now almost 2 years since we borrowed these funds from alternate funds. So the time has come for us to act and go back to normal rate of 10 to 12% is what
Mr.
I should say.
Radhakrishnan, I do get your point. Of course, it will be positive for your PNL if the interest rates go down. And by what you are saying, there'll be a halving of interest rates as well at those rates, which if you are able to lock in at those levels. But if debt reduces, that will also be positive, right? So is there any plan to reduce your debt in absolute numbers, apart from the refinancing that you're talking about?
So, as I told, our targeted debt number should be 1,200. Either by way of operation or other means, we should quickly reach 2,200 crores of debt. So that should be the comfortable level of debt in this balance sheet. This refinancing is hugely accretive to all the stakeholders.
Okay.
So that is the prime objective now to focus on.
By FY24 and 1,200 crores is you're talking about, right?
Correct.
All right. And you also briefly mentioned that in August, there's a repayment obligation of the principal. What is that amount?
30 crores.
30
It's
crores.
not substantial. Yeah.
I mean, that's okay. That's a small number then. I thought it was a larger number which could swing things.
No, the way it, Nigel, it is 25-26, this entire debt matures,
Okay.
right? Therefore, it is important to refinance.
Okay.
That's where I said.
Okay, so 25-26 is when your debt matures, and that's when you'll have to make payments on those amounts as well.
Yeah.
Can you give us...
And 1,000 crores and odd is not going to come out of operations, obviously.
Okay.
Right? Therefore, it is important to plan the refinance well ahead of the maturity.
Okay, of course. So the debt number and the refinancing option, of course, is important to track as far as the future performance is concerned as well. Mr. Radhakrishnan, can you give us a sense of when the demerger of the Rayon plant is going to get commissioned or completed by, so to say? FY23 is the timeline that you had given. Are you on track?
So there is something which we have disclosed as part of our results in the notes to our accounts too. There are certain corporate actions going in our subsidiary. We are looking at equity infusions through diligences. So we want to complete that before we go full steam on the demerger. Okay. So the demerger may spill beyond this March 23, because our focus is on to bring in, complete the due diligence and bring in equity into the balance sheet.
Okay, all right. So there's going to be equity raised in the consolidated entity, the current entity?
In the subsidiary.
In the subsidiary, that's the Rayon business.
Yes.
So first there'll be money that will be coming into the rayon business and then the demerger will take place.
Absolutely. Absolutely.
What is the quantum of money that will come into this entity? Roughly?
At this stage, I don't think I can divulge it.
Okay, very quickly before we let you go, how is demand on ground? Are you seeing some traction? The hope is that from Q4 onwards, things will go flying away. Are you observing that? Stronger demand in January?
The demand is good. The demand is good.
And pricing, have you pushed through any price increases or that's not been possible?
Price we are attempting at 5 to 10 rupees per bag. Some markets it's getting absorbed, some markets it's not getting absorbed. That's where we are.
Okay.
Oh, okay. All right. Thank you so much for joining us today and detailing your Q3 numbers, the plans going forward as well, and clarifying on a lot of other things as well, because the stock definitely is under a bit of pressure today, down 8%. So important to get in that management commentary as well. For now, we'll slip into a short break. We'll get you more on the markets and stock-specific action on the other side. Stay tuned. Welcome back. Well, the Nifty has come up from the highs around 40 odd points. As we speak, Nifty is up 96 points. Just a while back, it was up around 120, 130 points. So a mild slip from the highs is what we are seeing. And Bank Nifty is the one which is also seeing some losses from the highs. It's still in the green and decent gains. But yes, those are a couple of names that should be on your radar. For instance, IndusInd Bank comes out with numbers tomorrow. So that stock is at the day's low right now. We also have ONGC. Crude is higher overnight. And we also saw that windfall tax cut. But definitely it has not worked in the favor of the stock price today for sure. That stock too is at the lows of the day. The other one that I'm watching out for is ICICI Bank. So that stock too is at the day's low right now, and that is something which is putting pressure on Nifty as well. In the broader markets, we have some of these names, the oil marketing companies, both IOCL and HPCL, both of them are at the day's low. And the other names, we have something like a SAIL which is lower as well. Union Bank is also lower. So yes, mid-cap index that continues to be in the red right now after that wee bit recovery that we saw. But of course, Nigel, as we were talking about yesterday, after a lot of volatility, we closed in the red. Let's see what happens today.
Well, that's right. Let's see whether or not we can hold on to these gains that we're seeing. Well, as the world business and policy leaders gather in Davos amid multiple headwinds for the global economy, top Indian CEOs are exuding confidence about the India story. Tata Steel's TV Narendran is bullish on India's prospects as an exporter of steel. Let's hear out what he had to tell us.
China opening us has certainly helped commodity prices. So not just steel, if you look at copper prices, it's gone up about $400-500 in the last month. Steel prices have gone up in China. Domestic prices have gone up by about $100. So overall, we see a positive sentiment. Iron ore prices have gone up. Coal prices have gone up. Not all of it is good for the steel industry. But overall, the sentiment is changing in China, certainly. And that has a huge impact in the world, as you know. China is looking good. India is looking great. So I think in many ways, many parts of the world are picking up where it left off over the last few months. So we are quite positive over the next 6 months. And there's no reason why India shouldn't be a big exporter of steel. You know, India has the raw materials. And why should Japan, China, and Korea be exporting steel when they don't have the iron ore and we have the raw material and we should be exporting steel, creating jobs? The second part is, yes, when I look at our customer segments, if you look at automotive, they are back to where they were 4 years back. If you look at construction, it's quite strong. Industrial buildings, a lot of investments going on in supply chains, warehousing, a lot of investments in oil and gas. So all that will trigger private sector investment. So I think we are probably 6 months to 1 year away from getting private sector investment back.
All right, that's the opinion coming in from TV Narendran. And of course, we'll keep getting you more excerpts from those conversations from Davos. But for now, we'll take your leave on this edition of Chartbusters. Stay tuned. Trading Hour comes up next.